And Rebecca, I want to start with the idea that these companies trailed analyst estimates, but at the same time, we've heard so much about how the U.S. auto industry is coming back. How do you square those two things?
Well, first of all, the numbers that we saw were about in line with what we were expecting. So our estimate for GM was right on target. We were a little bit high on Ford, and we were actually a little bit low on Chrysler. So I think that when we look at the industry overall, we do see recovery because we were so bad last year. You know, at 10.4 million units was one of the lowest, I think, since 1982. This year is not looking all that much better at about 11.4 million units. So we are continuing to try and recover from a really low point.
I have to say, Rebecca, GM sales actually rising a little bit, so at least they're selling more cars than they were the same time last year. Ford falling back a little bit, but it's tough to be pessimistic when Ford is making like Goldman Sachs-sized profits, right? I mean, $4.7 billion in the first half. I don't care how many cars I sell. If I make $5 billion in a half, I'm a pretty happy camper.
Well, that's the important thing, Matt, certainly, is that the entire industry has been restructured. And the big three going through, Ford, GM, and Chrysler going through bankruptcy, Ford being able to renegotiate UAW contracts. The structure of these companies is so much more sound than it's ever been that they can make money at the 11 million unit mark.
Well, and people are paying more money for their cars, right? I mean, even if they sell roughly the same amount of cars, if you're now going to go out there and spend $30,000 or more to buy a Ford, and a lot of truck sales as well, as Lizzie pointed out this morning, it can't all be that bad, really.
Exactly, and we're still at about 51% cars to 49% trucks. So we are still selling an awful lot of trucks. But within those companies, they are starting to make money on much more than just trucks. And that's what's really important, too, is that they diversify their portfolio of products that they make money on. That was a concept that seemed to have been lost prior to the bankruptcy.
The Cadillac numbers caught my eye here because it was this question of, okay, if they're selling a lot of Cadillacs, who are they really selling to? We did hear, on the Ford side, they were talking about Fiestas, some of their lower priced cars, but if we're seeing Cadillac sales like that, what does that tell you about who's buying?
Well, one of the reasons that Cadillac is up so much is because they have the new SRX, which is a much smaller version than the previous SRX, and it's a fantastic vehicle. They're also seeing improvements in their average age. And so we are seeing the luxury market come back very subtly, and I think that we're also seeing more growth in less ostentatious vehicles, so something like the more discreet SRX. But the Cadillac resurgence has been a long time coming, and they've got some terrific product out there.
But I want to move away from Detroit for 1 second because obviously Toyota is sort of lingering out there on other people's minds. You've looked ahead to this. What happens? How big of an impact are the recalls?
I think that the issue with Toyota is that there are people out there that were contemplating purchasing a Toyota, and they aren't anymore. And so this is really a long-term issue when we look at their future sales and their conquest buyers, those people that are currently in a different brand and move over to Toyota. That's how you grow market share. That's how Toyota's grown market share. That's the part that's most at risk. The other part is the buyer that currently has their first Toyota, regardless of age. This is their first Toyota. This is not the dream that they bought. The Toyota ownership experience has not been what it's cracked up to be, and there's a very good chance that those people will go back to a different brand, maybe even a domestic brand, when their Toyota's time is up.